What it do, fam? If you've been following the news over the past few months, you'll likely have heard about Korea's intention to renew their application to the MSCI for consideration as a developed market. Many investors and public officials agree that having our market's categorization upgraded from emerging to developed could have a profound effect on liquidity in the market and solve the problem of chronic undervaluation known as the Korea discount. Well, that's what we're talking about today. You're watching Sekkider, and today we're talking Korea's bid to earn the MSCI's developed market status in an episode I'm calling Value Me Like One of Your French Markets. Also, Happy New Year. It's been a minute. I've been kind of busy, so it's been hard to actually get back in this chair, but actually really happy to be back, and I hope y'all are doing alright. Now, before we continue, we'd just like to remind you that this channel is meant for general education purposes only and is not meant to replace legal or financial advice from a paid professional. When it comes to investing, it's always healthy to take everything with a fair bit of skepticism regardless of the source, and that includes us. For that reason, nothing we say here should be taken as a basis for investment, and you'll have to do your own work and thinking before deciding whether taking up a position on any stock mentioned here is in your best interest. Want to know how? Well, if you scroll down a tiny bit and hit the like and subscribe buttons, we'll do our best to help you figure out how to figure out this game for yourself. And that being said, let's get to it. Alright, so since this is a big topic, I'm gonna do what we usually do here and break it down into a couple sections. First, we'll do a clear definition of what the MSCI classifications actually mean. Then we'll take a look at Korea's case specifically. So starting with the first one, what does the classification of developed market mean? Well, in the context of the MSCI, the classification of developed doesn't exclusively refer to the quality of the market, its constituents, or the underlying economy as it may appear at first glance. Rather, the classification designations are meant to provide investors with an indication of how stable, open, and large a given market is. The keyword here is market because, as is the case with us, China, India, and Mexico, countries can have robust economies with world-class companies but may not be real candidates for developed market status due to the MSCI's classification method. To understand this better, let's get into some of the reading materials provided by the MSCI themselves. Now, according to their market classification landing page, the three key aspects to consider when applying their framework are economic development, or how stable and sustainable the economic development of a country is, size and liquidity, or how much money is in the market and how many companies in the market meet MSCI standards based on full market cap, float market cap, and security liquidity. And finally, there's accessibility, or the overall experience of foreign institutional investors based on openness to foreign ownership, ease of capital inflows and outflows, efficiency of operational framework, availability of investment instruments, and stability of the institutional framework. So again, that's how developed an economy is, how big the market that corresponds with that economy is, and how accessible that market is to foreign investors. Now, generally, if a country is stellar in two aspects but lacking in one, it's unlikely that they'll qualify for developed market status, and that's kind of what happened with Korea during their previous applications in 2008, 2015, and 2019. Now, there are a number of potential concerns that can lead to a lack of confidence in any of these categories from the MSCI. For example, in some cases, countries may have too many protectionist regulations that discriminate between domestic or international investors, which is something that the MSCI frowns upon as it places international investors at a direct disadvantage. Now, obviously, this is not ideal because the ideal is to have a balanced, open market that's fair for everybody, but I don't know whether or not that's even attainable. Anyways, that's not really what we're talking about right now. Other cases that the MSCI frowns upon are things like the need for special paperwork like a QFII or a qualified foreign institutional investor license. And in other cases still, there may be limits on the percentage of market constituents that may be held by foreign investors, and that may not align with the MSCI expectations, right? Again, it should be free and open, or so is expected. Now, these are just a couple of a dozen of reasons why a country's markets may not qualify for developed status, even if the country itself is undeniably economically developed. Now, in the case of unqualified markets, the MSCI has developed a hierarchy of classifications, namely emerging, frontier, and standalone markets. Now, each of these levels represent potential concerns with the market that deem them unqualified for developed status. Emerging markets are those with a few concerns. Frontier markets tend to have more than a few, and standalone markets are those with enough concerns to disqualify them from inclusion in any of MSCI's indices. Now, here's a chart of the current classifications of markets covered by the MSCI, but I'll link to the relevant documents in the description box below if you want to dig into them. For the sake of brevity, I'm going to go ahead and dive into the MSCI's most recent notes on our market from June of 2021. Alright, so looking at the MSCI's accessibility review from last year, we can see very clearly the main reasons why Korea isn't yet a shoo-in for developed market status. Specifically, they note concerns about A. Accessibility of the market to foreign investors due to reasons not limited to issues with a lack of available company information in languages other than Korean and a historical lack of confidence in corporate governance standards from international institutional investors. B. The lack of an offshore currency market, which essentially means that foreign investors lack the ability to trade Korean won in a way that is not regulated by the central bank or transacted locally. If you're Canadian, try to send money over here. You can't do it in Canadian. You have to go through an intermediary bank, use your Canadian to buy American, and then use that American to buy Korean. It's obviously a pain in the ass and you lose a lot of money that way, but it is how our onshore currency market works. Now then C. We also have difficulties with investor registration and account setup, which requires those investing in Korean stocks to register with local authorities in a process which we go over in this video in the top right hand corner of your screen right now. Then you have D, a general lack of standard information flow with regards to things like estimated dividends and English information disclosure. And then finally you have E, restrictions on investment instruments like short selling bans and restrictions on the use of market data. Now, as you can see, in addition to those mentioned, there are still a number of reasons why Korea has remained an emerging market in the eyes of the MSCI, and that they must address if they are to improve their rating in the future. Now, the last point that we brought up, the short selling ban that was placed on the market during the first year and a half of the pandemic, is a single point that the MSCI used as evidence of market deterioration. While the market did make gains in foreign room levels for two big companies, SK Telecom and KT Corp, and that just refers to an increase in the number of shares that are available to foreign owners. Now, in addition to the document that we just looked at, the MSCI also releases simple documents at the end of every year that provide simple assessments of their national indices, and according to their statistics, when compared with the average emerging market, Korea's market is underweight in terms of two things: the presence of smaller companies and momentum. Now, the former is likely due to the relatively stringent requirements for listing on either of our markets, and that's something that has in the past led to local companies listing abroad instead of here. And the latter is one issue that can have a large number of pretty unquantifiable factors, such as difficulty accessing the market, a lack of available English language information on the stocks in our market, and a relative lack of stock market participation by the average resident, to name a few. Now, one thing that we do like to see is, well, exactly what we were talking about before with regards to the Korea discount. Specifically, when we compare the Korean index with other emerging market indices, we see that Korea's MSCI constituents are trading at a discount in all three categories of price to earnings, which measures the stock price in comparison to the earnings of that company, the forward PE, which refers to the stock price compared to estimated future earnings, and the price to book value, which measures the stock price against the book value or the tangible value of a given company. Additionally, when comparing the Korean index to the MSCI ACWI IMI, which captures large, mid, and small cap representation across 23 developed markets and 25 emerging markets, the discount becomes even more pronounced. Now, ultimately, financial authorities believe that inclusion into the MSCI Developed Market category can grow the market, increase liquidity, and help us rid of the discount that our market has held for over a decade. And how can we expect that to occur? 2 words: passive money. This is pretty simple. If the Korean index is included in the MSCI Developed Market list, it follows that the market would soon be included in 2 key indices, namely the MSCI World Index, which is a broad global equity index that includes large and mid-cap companies from all of the developed indices, and the MSCI EAFE Index, which includes all developed countries, including the US and Canada. These indices are important global indices that are a benchmark for a number of funds that are generally considered safe and reliable due to their stamp of approval from the MSCI, and there are a lot of existing mutual and index funds that track the constituents of the MSCI Developed Market list. Now, in addition to this, should confidence in the country's markets from the MSCI lead to these changes, it follows that retail investors would then want to enter the market soon after due to the increased liquidity and the growth of the markets. Now, we're not going to sit here and try and act like we know the future and whether or not this is actually going to happen if it were to happen, but in a best case scenario, this would flood our market with new funds and liquidity that would bring current investors in the market a big boost in returns whenever that were to happen. Finally, I know I said this was going to be 2 parts, but here's a third. What has changed between 2019, the country's most recent unsuccessful application, and now? Alright, now as we mentioned before, Korea's lack of an offshore currency market has been a main sticking point for the MSCI. In spite of the repeated concerns regarding this matter, the current and past administrations have been very hesitant to drastically revise the Foreign Exchange Transactions Act, which is linked in the description box below if you want to read it. And it was developed as a protectionist layer of defense after Korea's experience in the Asian financial crisis of the late 90s. Now, however, Finance Minister Hong Nam-ki has expressed an interest in potentially launching a 24-hour offshore currency market in pursuit of the MSCI re-rating. They've kickstarted this restructuring of their foreign exchange infrastructure with the development of a new API that will increase the ease of foreign exchange trading in the country while also allowing for offshore currency transactions as per the MSCI's expectations. In addition to this, Korea will be required to fully repeal the short-selling ban on the Kosdaq and Kospi markets before inclusion in the developed market status classification. Now, in spite of all that I've said, and the potential windfall that we can expect in a best-case scenario, there's really no reason to rush into the market right now, as Korea must first qualify for the MSCI watch list, which won't be released until June of this year. If they are included, we'll have to wait at least another year to see if all of the changes are up to snuff and the country will be upgraded, kept on the watch list, or removed from it. In fact, the country has actually been on the watch list before, and they were on it up until about 2014 when they were de-watch listed due to a lack of an offshore currency market, which is why that's one of the things that they're trying to address right now. So why then are we covering it as the first video of the 3rd year of the COVID-19 pandemic? That's a great question. Alright, that's it for me. Been going through it these past few weeks, but real talk, happy to be back in the saddle. Switching up residences in a week, so processing the paperwork for that has been a pain in my anus. But I did discover some interesting things in the process and learned a lot about a sector I honestly have absolutely no interest in. Might do a video on that. I'll keep you up to date. Oh, also, I commented in another video that I would do a full video on taxes, which is something that a lot of people want help with and will likely need to figure out given the new renewal procedures for short-term work visas like E2s. And although I feel comfortable handling the process for myself, I really don't want to get anybody in any legal trouble in case I fuck around and mess up a thing. And so for that reason, I'm still thinking about how to approach it so that everyone here, including myself, is protected. I would suggest checking on the NTS's Easy Tax Guide for foreigners, but there's nothing easy about that guide. In any case, I'm gonna figure out a workaround and hopefully have a video up soon, but in the meantime, be easy fam. Peace.